All right, let's see. Make sure I can turn off this echo here. This is, there we go, that should do it. This is Red Bed. It is Tuesday, July 11th, 2023. You'll probably hear my cat, Ronan, say hello too. He's noisy. He's a Sphinx cat, and he's a kitten, so he just wants to play all day. And if he hears me talking, he thinks I have guests, and he's just kind of the kite type of cat that wants to be where everybody else is. He's not a normal cat. Some people would find it annoying. I think it's kind of sweet. Anyway, you might hear him, and I apologize. I get really distracted when I hear him whine. It's not a child. It's just a cat, though, because he literally cries like a child. So yeah, it's Tuesday, coming into the close. I had a good day today. We're going to review and maybe catch a trade in an evaluation account. I'm done trading in my funded accounts. But if you want to get a hold of me, you can find me on Twitter or Threads, but I'm not really a huge fan of Threads. But Twitter, it's at RedBedTrader. And then if you want to learn more about the algo that I'm using, it is based on the Trading Perform algo, which was developed by my coach, Simon. You can get a hold of Simon. It's trade, the letter N, wordperform at gmail.com. He runs a trading room. There's a cost monthly to the trading room, but it comes with access to the algo that gets put on your desktop, and it has totally transformed my trading from basically guessing to having clear, objective, systematic decision making through for every trade. It really is, for me, the difference with being profitable or not. I wouldn't dare trade without it now. Even though a lot of times you might be able to just look at a chart and be like, yeah, that looks pretty bullish. If you're trading futures, you're using a lot of leverage. So, you can't take a lot of risk. Otherwise, you'll never consistently make that risk up. Because keep in mind, if you're trading, even if you have a strong win rate, but when you lose, you blow up big, you won't survive, especially with leverage. And options can like zero DTD options can be like that too. So if you're trying to trade futures or zero DTE options and you don't have a system, something that gets you into trades, tells you where to put your stop, tells you where to get out. Something it does, you don't have to, you can try to develop it yourself. It's not that there's only one way to trade or anything like that. It's, oh, what happened to my screen? um hmm. There, hopefully you guys can still see okay, but my screen disappeared for a second. Yeah, it's not like there's that everyone needs this algo. It's just I'm now a big believer in using a systematic process, particularly if you're going to use leverage. If you're trading common stock, or you're swinging options that are like 3 months till expiration, like sure, like draw a line and say, if I hold that and I don't get a daily close below it, I'll stay long. Like that's fine. There's nothing wrong with that. But if you try to do that in futures or highly leveraged options where like theta is a problem, if you try to do it with size, you won't survive. You won't know, like, do I keep taking it even though it closed below it and then came back in? Do I take it half size? Like, all of those things need to be figured out. People do this on their own, but it takes time, and it also requires a lot of practice to actually, even after you have a back test showing that, oh, in the past, if I would have used this system, it would have worked really well. Past performance is not indicative of future results, right? We always hear that disclaimer, but the truth is that's the way it works. Like, it might be all I have to base my decisions off of, but it doesn't, just because, for instance, like a certain setup had 60% win rate if taken every single time over the last 6 months or something, like something big like that, that doesn't mean that that's what you're going to get when you actually go live and do it. That's just not the way it works. Now, will it likely be better than something that couldn't achieve a 60% win rate regularly over the past? In my opinion, I can't make any promises, obviously, but in my opinion, I would much rather put my money on something that is systematic, and I've actually shown that in the past it did perform. But I have to remember that this trading day, individual trading day, and this individual trading month, and it's different. It's different than the last 6 months. So you need to be prepared for your system to not work. And that means you have to size appropriately and risk appropriately, so that you won't blow up, and you know what the signs are that a setup is no longer working in a given environment. So for me, I need the algo to see that. Some people can use the footprint, and they can interpret it live, and watch the DOM, and they've had enough practice and experience that they just kind of know, like, okay, this is the type of environment that I just don't trade in well, and then they turn it off and they might do okay. But if you're the type of trader that like is always looking to trade, then in my opinion, you need some sort of objective measure to get you in and out of trades. That was me too. Like I always wanted to be like I wanted risk on often, because I just saw the potential for like time is valuable, and so if there's a setup, I wanted to be in it. I didn't want to miss it. But what I realized after working with the algo is that all setups are not created equal, but there's certainly no excuse for not using the program, the what we call the process, if you have one. So once you've built and back tested and practiced an actual system that in your experience you've decided is good enough for you, obviously everyone's different, talk to a financial advisor, but for me, the way I had to do it is I had to see it work, and then I needed to convince myself that I got to stop guessing, basically stop taking trades that don't trigger in my system, which you'd think is really easy, but It's not. It's what is easy is guessing, like thinking, well, this is balanced, so I'm just going to buy every time we come down here. And, that would have worked. It looks like a good strategy in retrospect, but where would you have put your stop on the open? How many times would you have gotten triggered? Are you going to get three stops, four stops in a row before you actually get one that works? You got to decide that. And so the algo helps us with this, and Simon helps with this, and having a team of people keeping us accountable helps with this. But everything we're going to look at today on the Sierra chart with all the signals and the triggers and all that stuff, the colors, I know it's busy. And in fact, my screen is a lot busier than Simon's because I've added some of my own ideas and I'm still kind of I enjoy like exploring new edges and filters and stuff like that. I enjoy like the coding and the testing. Some people really don't, and you don't need to know how to do that to use the algo. But I I find some, I don't know what it is, if it's just like creative enjoyment, as well as like it's a confidence booster for me to like build some idea and see if it works how I expect it will. I will be honest, oftentimes I'll have an idea and it does not work how I think it will. And that's just the way the market is. You can think you understand things and then you code it up, you put it in, and you do the back test, and it's like, wow, that's nothing like what I expected. But when that happens, that is great, valuable information, because now you're like, okay, I clearly either A, misunderstand something, B, I made a mistake in the coding, or C, the most likely result is that you understand it perfectly, you coded it correctly, well, not perfectly, but you understand it fine, you coded it correctly, but there's more to it than just that signal. That whatever you put into the code is just a piece of that puzzle, and so you need to further refine it. And so a lot of the algos that, well, all pretty much all the algos that are on the original Trade and Perform, they've already gone through that refinement process. They've been, studied for a long time by multiple members and improved over time. The ones that I'm adding may someday be incorporated into the algo that everybody uses, but not until I have proof that the signals that I'm adding are actually helpful on a regular basis. So you're going to be seeing like basically signals that are getting beta tested. Let's put it that way. And I don't want to advertise something that isn't what I say it is. But realize that the best signals are the ones that everybody in the room already has, and that you can do just fine with just those signals. But like I said, because I enjoy the actual process of looking for more signals, I am testing new ideas pretty much constantly. And the fact that I can do it like live, forward testing with these Apex evaluations is a pretty neat way to do it, because then when they work, you qualify another account and now you have another signal to use to find trades. So anyway, and the other thing I want to mention, I'm not going to answer questions about like, oh, what does the star mean, and how do you get a pink bar, and how do I build this, and like, that's not what I'm doing these streams for. This is proprietary information, the stuff that comes from the Trade and Perform algo. It's taken years of Simon's and like the team's work to build and refine it. It's password protected, and it belongs to Simon. So, asking questions about how do I build this, or what aspects, like what are the certain specific what's it called, like the like what does it mean, basically, is it's not, I can't answer those questions, first of all, because that's not shared, right? That's all kind of, it's a black box in a sense. You get the signal, and those who develop the signal knows what it means and how it develops, but you don't need to understand that to use it at all. You don't need to even know what they mean, or like anything. You can just memorize a pattern and just look for it. The ones that I'm adding, I have shared quite a bit about what they mean and where they come from. But if I tried to spend the beginning of every single stream to review that. Every one of my streams would be even longer than they already are, and they're already kind of long. So I'm not going to answer questions about what is this signal, other than very I might answer it slightly, but I'm not going to go in depth anything that would actually help someone rebuild it. If you're interested in using a signal and learning more about it, the way to do that is just to ask for a free pass to the room from Simon, and decide whether or not you want to be part of the room. Then you can get the algo and you can work with it yourself. That's the way to do it. Otherwise, you're just going to have to take the time to explore whatever you want to make into signals. And like I said, these streams aren't necessarily like an advertisement where everyone needs this specific algo. But what I do hope people pull away from this is that you need something, whether or not it's something you build or something you purchase or whatever. You need a system, and it needs to be consistent. Otherwise, you won't have consistent results, and there's no way, most likely, really realistically, that you will be able to survive a drawdown, because you won't know when that drawdown is like abnormal, because you don't know what your signals normally do. So yeah, that's my goal. And if anybody decides that they're gonna stop guessing of whether or not they should get in or not, and decide that they want to build or purchase any system that like just objectively makes those decisions for them, then I've done some good for the community, is the way I look at it. But the truth is that my main reason for making these streams are for my own review, so that I don't forget some of these new ideas, and so that later on when I come up with new ideas, I can review these and say like, oh yeah, that's what I expected that to do. It didn't do it. It did this, and here's this new reasoning of why that might be, even though initially I didn't think of that. Now I have this other signal that I can kind of mix with it, and that's just how the creative process goes. You don't get to pick how many times it takes to find the right code. It just happens, or it doesn't, and it evolves over time. So anyway, that's enough of a intro. So for today, Tuesday, we are trading. If you look at yesterday's regular trading hours, which is where we had most of the volume here, we are trading primarily within the range of it, but we did break over the high. You can see on Monday we peaked above the voodoo range level and rejected, and then at the close we pushed back up into there, but they sold out of it. Overnight in London here, they bought it up and swept that liquidity. And I talked about in my previous stream where the higher high, higher low, higher high, that basic pattern is really common in futures, not necessarily to start a new trend, but as the beginning of a liquidity sweep that then rejects and creates a resistance area. So that occurs when there are trap buyers above us. Now, for those who haven't traded in like for a long time and don't know what it's like to trade different types of markets, that might seem like a surprise. If all of your setups are bullish and you look for trending stocks breaking out or gapping or whatever, then usually higher high, higher low, higher high is bullish. But when that's not the case, when they're not trending, or not trending up, when they're not breaking out, when they're up over any real significant level, but maybe just a smaller level, but nothing on a higher time frame, let's say, and the higher time frame, when you actually look at it, has trapped buyers. Those trapped buyers, the guys who are buying here in that wick and here, all of those guys who are still in the trade, you can think about it that way. It doesn't necessarily have to be those exact traders. It doesn't actually matter, but you can imagine, I think, that somebody bought up here, and if they were a long-term trader, they may have put their stop loss down here, right? And if someone is a long-term trader buying here, well, they might have put their stop loss there, right? But if you look at a higher time frame than that, you can see that we've been pulling back for multiple days. So there's additional levels on the, if we go to a higher time frame, there's more trap traders higher up. And so those just kind of like multiply the effects of these little liquidity grabs or liquidity sweeps, which is what I usually call them. So whenever you look at a higher time frame and you basically have what looks like a neutral market like this, or it's bearish, but it's not. It doesn't look like this, right? This, if you're looking here, these, if this is the higher time frame, if you now zoom in, most higher high, higher low, higher high patterns are going to be totally fine to buy as long as you can put your stop on a higher time frame underneath a higher low. And that's just the regular trend trading that like CFAs do all the time. But when you don't have that clear trend on like a higher time frame, or perhaps you do on like a weekly chart, but we are so zoomed in as futures traders that those levels where people get trapped on the weekly chart just aren't even reached every day. So you can't, I guess all I'm saying is something that you recognize if you were, because see, I started as a swing trader and then like evolved into more of a day trader. I still do swing trade a little bit, but not much. Most of my effort is in day trading. But what you'll find is the things that work for swing trading, they will work for day trading as long as the higher time frame is in is coordinated. Basically, it needs to also be going in the clear direction as your lower time frame is. But when you have disagreement between the time frames, what you end up getting is these little small time frame fake breakouts like this and this. And that's just the way futures work. That's honestly just the way day trading works, unless you're trading gaps and runners. Like if it's, like if you're trading micros or what's it called? Like penny stocks and things like that, like where you're buying breakouts and like then sure, like you're gonna see that and you're gonna see bullish and size appropriately so you can put your stop down here and you're good. But in futures, I can't put my stop below yesterday's low and buy a breakout over yesterday's high. That range is way too much risk for the leverage that it comes with. So because every single time we move a point in NQ, every NQ contract moves $20. So if we move 10 points against me, I'm down $200. So the idea that I'd put my stop down here at 1560 and buy a breakout of 15,230, like 15,240, we're talking like over $2,000 of risk for every single contract. Now, for some people, that might not be a big deal, but for most of us, that's not, you're not going to make that $2,000 often enough within the day to make it, to have an edge there. Because with futures, you need to be out by settle. You technically can have a bigger account and swing trade futures, but most of us are not doing that. Most of us are looking for small moves, very precise entries, very precise exits. So you can't just say, well, the weekly looks bullish, the 4 hour looks bullish, so I'm going to buy a breakout. That's just not going to work with futures because you're not going to get continuation immediately. You might be like quote unquote right that the market's going higher, but what'll often happen is after the breakout, it will actually come down and sweep the small time frame stops, test for sellers down there, and when they find none, then it goes. But you can see that can require multiple sweeps of different levels. If you think about it that way, like this one, the buyers who bought up here put their stop here, those guys got taken out. The buyers who bought this, when this broke out, they put their stop here, those guys had to get taken out. That's the way the market works. And if you want a better technique than just buying breakouts, look for a way to identify these sweeps and then to know with order flow when, not know, but be confident that that sweep has ended and that you've now returned to the primary trend. Because now, rather than getting long here at 15,243 or whatever, you've now got a way to get long down here at 15,123. And now just bringing it back to the breakout point where everyone got long, even if they all sell, you will have already paid exponentially for the risk that you put on that trade, putting your stop down here. Whereas here, for instance, if you put your stop down here and you got in up here, the chances that you're gonna get whatever that, let's say that's your stop and this is your entry. So you have to find 60 points just to get 1-to-1 within the day. So not only does it have to break out over the high, but it has to continue higher for another 60 points. So you'd have to think that before the end of the day, we could make it here. Now, is that possible? Yes. And like I said, people totally do it. Do they do it consistently without blowing up? In my opinion, they don't. The traders who try to do that with futures eventually blow up or bleed because their risk is just too big. So instead, rather than trying to figure out a way to decide or better understand why this breakout and this breakout and this breakout like didn't immediately work and then figure out whether or not this one would, in my opinion, that's not great use of your resources, including time, because even if you had a good sense at this moment that this was going to break out, if your only option to manage risk is to put it under the last swing low down here, well, you need to, like I said, make 40 to 60 points just to get a 1-to-1 risk reward ratio every time you take a trade. Like that, first of all, whatever that condition is that suggests that the breakout's holding, like for instance, maybe it has more volume, it's not going to occur every day. And then when it does, if it occurs now, 10 minutes before the close, well, guess what? You're not going to make 50 to 60 points, and at settle, you're going to be forced to get out of your trade. You might be positive, but that doesn't even pay for every single time you get stopped. Now, those breakout trades, I've seen the backtest for them. They're maybe 35% accurate. So most of the time, people are getting stopped out. And you can see that today. Breakout, stop, right? If you put your stop here, you get stopped. And then breakout, and then it could stop again, right? And now we've already had, 2 or 3 of them. So maybe this one will work. But unfortunately, it doesn't work that way. You can't just wait for the third one. I wish it was that easy, but it's not. It's just like, it's 30% isn't, or 40% basically like randomly. So you could get 9 or 17 in a row that fail. But some of them will work. And if you're trading a high enough time frame with a small enough leverage where you can actually hold down here overnight, the one that does work will eventually pay you, and maybe it'll pay you more than 1-to-1, and then that's a reasonable strategy. All I'm saying is that's not a reasonable strategy with futures. It's just not worth your time to mess with it, in my opinion. Instead, like I said, where you want to spend time deciding whether or not you want to trade or not is, first of all, to figure out a reason or a system that tells you with relatively high success rate that, like, for instance, this attempted breakout has failed, and then being able to identify where the liquidity is that the market wants to go collect now that it has failed. So for me, for instance, just looking at the candlestick chart, now this is a lot easier to do in retrospect, and if you're doing it live, I need the algo personally, but you could also use the DOM. And I'm not surprised we went to high of day. We'll show you. I started this a little late, so we didn't get to actually watch the live trading, but I wouldn't have taken a trade in the last 15 minutes. So we'll do it in review because, like I said, I'm primarily interested in seeing how some of these new ideas are working, and I already made my money today. So, but here, for instance, this wick failing to get over this high, and then if you look inside of this candle, most likely there was some order flow information that would have identified that this high and the drop left buyers stuck up there. And so once you see that and then they get taken out and they attempt to recover but fail, that move to collect the liquidity down here and maybe go further is going to be a much better win rate than your breakout trade. The breakout trade, like I said, might work 35-40% of the time. Here we had 1, 2, 3 that failed and 1 that worked. Whereas, like I said, if we dig into these individual candles and look for the order flow signals that say, hey, there was a breakout, we had buyers, should have worked, but it didn't. And now those buyers are sellers. That, if you have the ability to see that, is going to work way more often. And the great thing is that your entry now is like here at like 15,219, let's say, or 15,220, and your stop can go up here at 15,240. So now, rather than risking the totally crazy, whatever I said it was before for the breakout trade, like 60 points or something, with I say that's crazy because with futures that's just way too much money for anyone trading at NQ. You can do it, like I said, as a swing trader with options with a far away expiration and low leverage. Yes, common stock, trade QQQ, you can totally do it. But if you're trading futures, you need that 20 point stop or less, in my opinion, to really have a scalable system. It needs to be something where and then you need to have a win rate that if you're going to play like that, then you need to be able to get those 20 points back most of the time. At least 50% of the time, the market needs to continue your direction for the same amount of points as it would have taken from you when you lose. Whereas, like I said, with the breakout trade, you're lucky if you get a 40% win rate most of the time. And so more than half the time, 60% of the time, you actually lose those 60 points, which means that when you do win, you need to make more than 60 points just to stay profitable. And otherwise, you will either blow up or bleed your account out over time. You might have some really good winners, and it might look like you're doing really well because the market gets hot. But then as soon as that heat disappears, unless you have a way to tell you not to trade, which, like I said, most people don't, then you're going to give it all back and then some. So what I figured out with futures is that you need a system that you can pretty much apply any day. Obviously, there's going to be some days or some environments where they're just not going to work very well, and you need to learn what those are. But the majority of the days need to set you up with that setup that you can put your stop only 20 points behind your entry and get at least 20 points 51% of the time, let's say. And then where you build your account is actually, there are two ways. One way you build your account is you take the trade often enough with that 55 or 60% win rate that now your account is big enough that you can handle a little bit more leverage, so you can size higher and just keep doing the same thing. But rather than trading micros, maybe now you're trading the minis. So rather than risking $2 per contract, you're risking 20, and all of a sudden your account is exponentially growing. The other way you grow your account exponentially is start to learn or find order flow signals that identify when this, like I said, if this was our short here on this wick, which I think was a good one, the primary target would have been, since it was a 20-point stop, it'd be 20 points from there. So like this would be your primary target. And then if you have a way, either with the profile or with levels, and then add order flow to that can basically tell you whether or not the market is doing what you expected, to tell you when you should hold runners, because there's more liquidity sitting behind swings to the left that you might go and get. Now, you're not always going to immediately go pick up that liquidity, but if you don't know how to see it, and you don't know how to like what the order flow looks like when it's going to go there, more likely than not, you're going to end up holding runners every single time, and you'll give back, even though you might make the 20 points on like one of your contracts or whatever, however, depending on how many you trade. Let's say you're trading 2 contracts, just to simplify things. You might take one off at 20, and then you'd have a target for where you'd try to take the second one, and then maybe like trail stop if you're into that. If you're not trending, trailing a stop is a horrible idea, by the way, but that's neither here nor there. But yeah, so you need a way to say like, okay, this is my most likely spot that I'll get filled, and so I'm going to get in here, I'm going to take profit here, and then I'm going to hold a runner till here. And then if the market keeps going, you didn't do anything wrong. That little chunk is just not your trade. And as long as you have a good win rate and you're able to execute that trade over and over again, and like I said, you recognize that like when there is no swing to the left and order flow dries up down there, you have to know to exit that runner. So like, let's say you did the same thing here, right? You saw a failed breakout, you waited for the recovery, and it failed. And you're like, okay, I can't put my stop up here because that's way too big with my primary target being to the left. And if you don't see that, then you need to learn, like practice that, because that needs to be like second nature of identifying how much of the actual move is already finished before you get in, and identify that you can't put your stop up here with futures, even though you want to. You have to put your stop here, and that means your win rate's going to be lower, because sometimes it's going to come up here, sweep the stop, and then go lower. But one way or another, let's say you said, okay, I think I have odds to get in here with my stop here. Well, again, you'd figure out that this is maybe 15 points, so I'd have to take 15 points here to pay me for the risk. And then with the other contract, you need to decide, do I have good odds to hold this for additional swings? And there will be times when it should and times when you shouldn't. But in retrospect, it's like, oh yeah, you definitely shouldn't have. But or in live, it's not that easy, because it's very easy to get biased and just kind of decide that like low a day is getting taken out and I'm going to be short when it happens. Whereas if you actually have a objective way to determine whether or not you think that the market has the energy to keep going, you can't really argue with that. You can say like, wow, my bias is really bearish for one reason or another, but I'm not seeing that in the order flow. So therefore, if I take any liquidity, I just need to be done. And just like you did here, or just like I suggested I would want to do here, taking profit here is not wrong, even though it continued. You just need to do for you what pays you the best. So that's, I think, a concept that a lot of people just don't really get. Like, you have to accept that a lot of the times you're going to be wrong, first of all, and then like maybe more than that, you're going to be right about the direction, but you're potentially going to be wrong about how far it goes. And I'm not saying you personally, I'm saying all of us. Like, you could be really good at reading a chart, and you still can't really be certain ever when you get into a trade whether or not it's going to go here or here or here. You just don't know. But as the market is moving, it leaves breadcrumbs to sort of show us that it either has the energy to keep going or it doesn't. And that is valuable information, let's say, once you've learned what it looks like. And anybody can do this. You just, if you don't have the algo or something similar to it, what you need to do is look at the footprint and record the DOM, and then review the actual order flow. Like, look at the time in sales, look what the orders look like at spots like this, where you might have thought that low a day was going to get taken and it just couldn't push any further. So yeah, a little bit of a tangent, but I think it's important to remember before we go into all these setups that, you know, there are ways to determine what you might not know this time whether or not you're going to be right or wrong. You won't know whether or not this time it'll work, but there are ways with enough time and effort to hold on real quick, I gotta answer this real quick. All right. Yeah, there's no way to know that you're going to be right or wrong, but there are definitely ways to, there's evidence along the way within the trade after you've been triggered in. There are things to look for that can tell you whether or not your trade is working how you expect or not. And it's not just how far the market's moved. It's it's like derivatives of price and volume and other things, like things you find on the order book and the footprint that would suggest that most of the time this evidence is here. They don't continue lower, let's say. Again, it's not you will not find a system that's 100% correct or really anywhere near that, but you can definitely get better with studying what they look like when they don't work and what they look like when they do work, and just suss out what is it that could have signaled to me that this was the spot to exit, or this was the situation where this trade, even though it triggered valid, it's just not working, and I need to either flip directions and look for a bull trade or whatever if you were short there, or I need to learn to know how to let go of this trade before my target, yet not let that be arbitrary, because otherwise, anytime you feel like it's not going to work, you're just going to exit and then you'll never hit your target. So it's not easy, but there are ways to do it. And I will say the algo has helped a ton with this, because when you look at the footprint, let me just show you. So if I pulled up a footprint, let's see. What did I move? Hold on. There. Okay, so I don't know why this is showing behind it. That should help. All right, so if I pull up a footprint, this is a delta footprint of the NQ, we can look down there at the low. Now, again, we're not going to make money based on this move because it already happened. But we can look and say, what did it look like? And what can I watch for? What sort of evidence was already there that maybe I just missed that I can look for in the future, and potentially make money on the same patterns happening. Now, like I said, it is possible to do it with just the footprint, and because that way you know where the orders got done. But then you'd also need some more information, which I have down here in number form, basically saying like how fast the market was moving, how much the market was like what's the way to say it? Like where all of the orders were, whether or not just what price, but like was it aggressively dropping or was it aggressively rising? Things like where the actual orders were and whether or not they got pulled or not. All of those things are relevant, and if you can find the patterns, you're not going to be right 100%, but you're going to get better at knowing when to pull your order or when to exit your trade, because you've seen it 100 times before that when you see this, it just doesn't work. Like this setup that's valid most of the time just stops working when this certain order flow signal's there. So yes, you could dig in here and you can say, okay, here's the low, and whoops, come back here. Here's the low, and so we could try to like dissect that low and say, what was it that was unique about this that could have told me to get out of my short, let's say. Like, and I wasn't short, just using an example because I'm pretty sure we're going to find with the algo that you actually had some pretty significant info. But it's here too. You just don't have a glaring signal that like, oh, there it is. It's this little 31 here that's purple, and then it's below the 55, and this plus this is less than this other number, right? Like you can do it that way. Like people really do it, but I don't. Like I can't do it that way personally. Like I did it for a long time, and I just I'm not decisive enough when I didn't have a clear understanding of like which evidence is the most important, when is that evidence valid, and by the time I'd make that decision, my entry had been lost, and now I'm risking way more than I want to get into that trade. Now, would I still make money on the trade? Yes. It would still quote unquote work. I would still make money on the trade, and if I decided to get in most of the time, but the risk reward was so much worse because I wasn't getting in at the key point where I had the information. I just couldn't process and interpret it because there was so much information, and I didn't even know really where to look and what I was looking for. So it's here. You can find it. And like I said, if you record the DOM and get used to watching the DOM and what happens at these swing lows, like you can kind of learn to get a feel for what that's like when like sellers are getting absorbed. But what I find way easier than that, like leagues easier than that, is you do have to learn what the patterns are. But if I told you that a very simple pattern for knowing that sellers are getting absorbed was to get either two of these white dashes in a row and then get above them with a triangle that's white, that would be one. And then the other one is find a yellow dot like this, or this, get above that with a triangle, and then produce a blue dot. So in both of those patterns, you would get long here or here, because you wouldn't know that blue dot is for sure there till the bar closes. But you're getting in here, let's say the later signal, 15,178, let's say. And you're, in this case, realistically, now what I do is my stop goes down here. So I'm risking 10 points, but realistically, it could do this, right? Like that is a thing. You're not going to catch it 100% of the time if you're not able to put your stop kind of where it belongs. Hi, cat. Where your stop belongs is here, underneath that. But the old way of doing things with the dots, the blue and the yellow dots, and like I said, the basic rule was if you want to look for a long and you're looking for a situation where sellers have run out of gas, you need to go. You need to get above a yellow dot with a triangle, preferably, or at least a bar that gets this yellow line above the yellow dot that's not pink. And then if it is pink, and honestly, in this situation, you could probably just buy it there. But if this is pink, and if this is pink, then what you really want is you want to wait for a blue dot, indicating that basically this one I created, so I can tell you a little bit about it. But the dots are showing a shift in, how can I explain this? It's a derivative of volume and range. So it's looking at like how much work are buyers or sellers putting into the move and what kind of result are they getting from that move. Now, these are all Renko bars, not candlesticks. And the great thing about Renko is that it has nothing to do with time. It's just print a bar bullish if it travels this far up from the last bar, and print a bar bearish if it travels this far lower than the last bar. And it makes coding a lot easier when you don't have to tell the algo that, like, look over these last 3 candles if it's going this fast, but if it has slowed down, you might have to look at 5 candles or whatever. Like, it's just too complicated and you're not going to be consistent. Whereas with Renko, like, it can take 2 minutes. Like, this move down took from like maybe not even 10 minutes. And then from the low at like 36 or so to the entry was only 4 minutes, if that. No, less than that. Like 2-3 minutes till here. So, like, you could kind of get a feel for that and maybe guess a little bit. But for me, I need the signal, the dots, to say, okay, we got a significant shift in how much volume is being put in and what they're getting for that volume, if you will. So not every blue dot is going to be an entry. It's going to depend on the situation. But there are patterns, such as getting behind a yellow one and then printing a blue dot. So even these, getting behind these and then printing a blue dot, means that now I can put my stop down here, which means I can get long. Wow, I can get long because it prints here. It's when the bar closes. I know it's possible to get it, but it's not valid until the bar closes. Once the bar closes, it's not going to disappear. It's not going to repaint. It's there forever. But while the bar is live and I don't know whether or not it's going to go, in this case, 15 ticks higher or 15 ticks lower, I don't know whether or not it's actually going to be there when it closes because I don't know what the market's going to do. But once it's closed, and if it's there, it's going to stay there. So my entry ends up being here. And then since they made that volume shift down here, I can get rid of this one, that's an old one, I can put my stop under it. So in this case, I might have a 10-point stop. And so naturally, I would need to make sure that I can get to 99 without getting crushed, right? So I wouldn't want to do it right into like some heavy resistance like this. You wouldn't want to take the trade at 204 because that resistance, well, sometimes it's going to break. A lot of times it's going to act as resistance and there's going to be sellers waiting there and you potentially could get swept if you look close here. Let's say I said I have a yellow dot. Now in this case I think I only got behind it with pink bars, but let me just see. If it's only pink, it doesn't count. It's got to be bull bars that are white. So pink, white. Okay, so there is the, like what I call a beat, like this yellow dot's been beat. So now I can't just get long because I can't put my stop down here. I need a shift to the bull side now, not just to beat the last shift to the bear side, but I now need the up pullback basically and a shift to the bull side. So that's it right there. But again, I don't know about that shift until here. And that occurs at like 207. And because if you look further to the left, this is right into resistance that I'd be buying. I should expect that after they suck up liquidity up here, just like we talked about with the candlestick charts, it's usually going to try to pull back. It might not succeed, but it's probably going to at least take my stop. That'll be very normal. Whether or not it takes this one, like 2 dots behind, yeah, sometimes it does, sometimes it doesn't. But I can't put my stop at 80 and get in at 15,207. That's too much risk. I can't risk more than $500 in every single contract. Otherwise, I'd need to have $1 million account to be able to trade 5 contracts. And I don't. So I can't take that trade because what usually happens is they come back. If you draw a line there, they take out the stop sometimes by like a tick or two. Oh God, no, I messed that up. Oh, I hate when that happens. Sorry. Let me just fix this. We don't need all these, but we need some of them. And then 16. So, well, that's what I was trying to do. Just happens to be right under the window, and I grabbed it and let go and cascaded up. So let's say it gets stopped here. You don't know, unless you get a new signal, whether or not this is going to continue higher and sweep this one, or, and when I say sweep, I mean do this, sweep, and then come down and take your stop. You don't know. That it usually does. But the point is, you need, like I mentioned before, you need to know where does this setup work, like 60% of the time, and where does it fail 60% of the time. Well, if my idea of a failure is pulling back 10 points, where it fails is situations like this, where I'm buying right into resistance, so my stop is only 10 points from resistance. You're gonna get swept all the time, like more often than not. So you can't take that one, and you need to know that there's resistance here. Whereas down here, this blue dot, you had this whole move here to retrace. And if you look closely, if you know more about the algo, you had aggressive sellers coming in here that could potentially get trapped. So I know that stars, yellow stars, as well as yellow X's, when you're going in the direction that they're going, they usually push the market further because it's people aggressively attacking price. But once you take those guys out, like this, now these sellers who aggressively sold down there are offsides, and they're going to become buyers. So I need, if I'm going to get in here, I need enough room to get to the highs here that I've already paid for my trade. In other words, I'm exiting 10 points and getting paid here, so that even if it now comes all the way back and stops me out, I'm not going to be down an R. I'm going to be down small, if that. So you need enough room to that initial target, because I would expect that this, or this, someone's going to try to defend because they aggressively attacked. So at least before this, I would have expected a down bar. Now, sometimes they just wick and squeeze and they don't go anywhere, which is why you don't sell there. But I mean, why you don't short. But a lot of times here, or here, you'll see a little bit of a pullback. Sometimes it's a wick, sometimes it's 2 bars. You don't really know. But because you don't know, it means I need to be prepared for that pullback. And if my stop is not, in this case it is, but if it wasn't under them, it would be very easy for the market to take me out. So that is natural resistance because they're aggressive traders. There's no stars to the downside down here. So these guys here and here are easy to beat, but these are not. Sometimes they beat them anyway, but we can find plenty of situations where they don't. And so, like I said, the whole point of that is that you need to know where your first target is. And if you keep looking back, you'll find other situations like this. So like here's a star and an X. So I would expect that even if we lift here, if they try to beat this and they don't have any aggressive buyers, they're going to defend. So I can't get long on that dot. It doesn't make sense because resistance is literally right here. And so even though in this case I've got a dot and then a blue dot, I have not gotten over the yellow dot with a non-pink bar. So they're still in the game. They're going to defend as soon as the market is done sweeping these stops. So anybody who shorted here at the T put their stop here, and that stop got swept. But then this aggressive trader, if he's still interested, he's going to be like, there's no one else buying, I'm going to sell again. And then you see they try to defend, the buyers try to defend here, but sellers come in aggressively. Well, here's the sellers. Guess what happens when we beat another T? They come up to this spot. If the buyers can't get over that, guess what they do? They defend, and it goes lower. So that's normally how this works, is you get aggressive traders, you trade usually to them or slightly behind them, and you would expect a pullback here. Sometimes you don't get one, and that suggests that there are a lot of sellers trapped down there. So the point is, there's an easy way to see that this was your entry if you were watching. But if you missed it, let's say you didn't see the double dash, you didn't see the dot getting beat, and then you missed the blue dot above the yellow dot, which is almost always bullish. Or maybe you didn't take the trade because you didn't think you had expectancy, because you thought they were going to defend this and didn't want to buy it into resistance. The good news is that when you see them not do it, when you've got all these aggressive sellers and they just give up, well, now I know they're trapped because they didn't even defend. So now all I have to do is find a long signal to the right of those aggressive sellers. So now I just need to follow a buyer right there, or there, or, oh, that one's really high. I'd prefer it down here. Yeah, they didn't give us a great pullback. That's an apex trap. That's all right. But this is just, there's no meat on the bone there because that's resistance. So you need them, if they would have come back to here and bounced, that's perfect. This is pretty good. And that's pretty good. But again, you have to think that you have potential to break through here. And if you look, there is an aggressive seller at the high here. They try to defend right away. They defend again. They should sweep the stop, and then we'll know if it's going to go higher or not. They sweep the stop. Do they defend? Nope. So guess what? This guy's trapped. What should we do if we see blue dots above that? We should probably buy them. Will they all work? No, but many of them will. That one fails right into this level, which was a low volume node. So from the footprint. Now, what's cool is since they are trapped down here, if they pull back, we can do it again. We just want to triangle up right there. Long. And you made 10 points. Triangle up, long. And that's where you are right now. So the bars on the right side. Oh, you're talking about the footprint. Sorry, I missed that. This is what's it called? Volume by price. So it's how many contracts were done at that price. So, in other words, most traders today did their business here at 15,259. Is that what you're asking? On the sorry, it must have come through earlier. I missed it. Because yeah, I don't show volume by price in my main algo screen, but it is interpreted by the signals. So it's like it's in the studies. Like I have it here, but we tell the algo watch for anomalies in it, and then if it happens, give us a signal. So I don't have to look at it, is the idea. But that's what it is. It's just looking at where, like, which price is the most common in this period. And I have this footprint set up to start over every day, 24 hours. So if you go back, most of the volume, so if I do this, and that's the volume profile of the day, most of the volume was right here. If you're not familiar with volume profiling and you want to trade futures, you need to learn it. It's essential. You don't need to know everything about it, but like you need to know it's like this. If you don't know how to look at this and find which levels matter, you're way behind, like the average trader. Now, unfortunately, having the levels is not enough. Just like the Voodoo range levels, it's the same thing. Like I could say that I have 3 low volume nodes up here, and I expect one of them to act as resistance the first time in. Probably the first one, but not always. And I can't just sell it because it touched the level. I could, but I wouldn't know where to put my stop. I can't put it up here. That's way too much risk, right? Like I talked about before. And like previous point of control, which is the green, like so it's the days, the place where most of the trades were done the last time we traded in this range. I expect that traders are going to try to target it, and if they reject it, it's probably bullish, but I can't just buy. I have to see order flow. I have to see actual buyers stepping in and trapping them. So the sellers who sold underneath it. So if I go back to yesterday, you're going to see, do I have to move this? I do. So if we go here, let me do it on the higher time frame so it's faster. So if I go, this is the same thing, just higher. There's more ticks per bar. So 7, 10. So this green came from the profile. It's just the point of control from a previous day. And remember the rules that I talked about for these 2 trades to identify exhaustion, right? Yes, we could look at the profile and the footprint, and we could try to read it in real time and see that they're absorbing. Or you could watch the DOM and see that they're pushing really hard but not getting anywhere. Or you could just look for 2 dashes in a row and a triangle up above that, preferably. This one, did it get above? It's got to get above the POC, the little yellow line. the close of the triangle. Wow, it's really close. It might have just missed. Otherwise, yellow dot, beat it. Now we need a blue dot with decent there. So now that's a spot I can put my stop under. And so I can enter anywhere in here. And there we go. So they got stuck basically selling at the lows. Now another thing that the algo shows me, two things that I see right away. First of all, we talked about aggressive traders, which you can see on the DOM, but I can't go into what it actually is looking at because it's password protected and I don't need to know to understand it. That's where he is. What normally happens when we come back to his level and sweep above him, he usually defends. He doesn't. It means he's really stuck and wants to be a buyer. So now anything down here is a buy. And then there's probably another one. Oh, let's check the other time frame. Hold on, let me get rid of these. Let's see if we had a similar setup on the other time frame. Where are you? Here we go. Yellow dot. White bar with the VPOC, the little dash above the yellow dot. Now we need a blue dot. Didn't get it. Took it out. Let's see if we can do it again. Yellow dot. So no entry, not a stop, just no entry. It just didn't hold. Yellow dot. Can't get above it. Yellow dot. It's got to get the VPOC above the... Nope, not quite. One more maybe? Not pink. Right there. Okay, potentially trapped. Does it have a blue dot? It does. So you could buy that, or you could wait for the next blue dot. But that's your first entry because it's got a blue dot, so you can just put your stop right there. And so entry is like 15.084, and stop is 15.079. Pretty small stop. And then the other way to see this, we don't have the double dash here. Not quite. Oh, well, no, that's got one between. This one would have to have a dash. So they didn't quite paint it that way, but we have aggressive trader, right? The X's. They tried to defend, swept, right? That's normal. So now we would need another aggressive trader who doesn't defend. And we really didn't get one. So the only way on this time frame that I can see to catch this is to get long here. Otherwise, you're waiting for a pullback into this area since there's really no more aggressive traders that are trapped. Or wait for a blue dot and make sure that you have room to resistance, which you do. So you could buy this. You could buy this. Your stop goes underneath. And usually once you've got the dots that are being held, triangle up is usually good. And again, as we get close to the resistance up here, it's going to get thin. But technically, this one's still good. Now we're getting close, see? So I'm probably going to ignore that dot, or maybe that's the last one I take, because I expect them to defend it. If they don't defend, well, now they're trapped, and now I want to buy a dip, as long as they reverse it and give me a triangle up, like I showed before. But here, they defend it. If you look, it's usually right after it. Here's the resistance. They sweep the stops, and they defend. That's normal. It means this guy is not yet trapped. It means I don't want to be aggressively buying. I need to wait now. I don't have to short, because down here, there's still lots of trapped sellers. And if we can get down there, I might get another setup. But it means I don't want to buy that dot. That would be bad. It's just too hard. That dot, don't do it. Does it work sometimes? Yeah, but I'm not going to do it personally because I'm like in the thick of what they're trying to defend. And for the moment, they're succeeding. So now if we see they're going to defend it. And so you don't want to be buying in here. You need a way to know the difference between like the ones back here that we saw and this. You don't want to be buying this and this. You can't just, in my opinion, you can't just buy every triangle. You have to have a sense of where you are on the chart. Now, eventually, they will get out of this area. So I may miss this one. There's other ways to get it. But with this system, you'd miss it. And then you'd have to look to the left. And we have a resistance, but no aggressive traders, no stars or X's. They sweep the stops and turn it. Do I want to be getting long on triangle up? No. This is neutral to bearish. See that? Now, I didn't get any triangles, but you'd want to wait until they pull back. Now, what I really want at this point, because it's probably neutral, is to come back here, sweep the stops, and that's how you would have gotten this one. You'd see this, and you'd know the stops are under there. They sweep it and then give you the triangle. That's better. So if this gets swept, or if better would be this gets swept, and then they turn it around, it can be bullish again. Needs to be a triangle up. Right there. So see how they got under it? Triangle up. Now, the only thing to think about now is on the way down, do they have aggressive traders? There's one right here. Have we gotten behind him? No. So we don't know if he's going to defend or not. So this one is not that great because sometimes he's going to defend and you're just going to lose. And then this guy's going to probably defend too. So it may fail. But on a bigger time frame, I know that there are sellers trapped down here. So there's a relatively good chance it'll work. But I might be better waiting for the next one. Because if they come up here, take those stops, and then he does defend, and we sweep this, and then get a triangle up, and no more X's or stars down, now it can just squeeze. So let's see. Oh, it just goes. Yeah. So again, it's okay. It's not wrong. It's just riskier. But once you see that he did not defend, now he's trapped. So now I want to buy dips. So blue dots, triangle up. Like this one would be okay. This one is really close to resistance, but you guess you could do it. But we know he's stuck. So these big sweeps, the big squeezes, very common. Now, here, this was resistance, right? Don't buy that. Don't do that. Because you know that they're probably just going to sweep it and take you back. Like, why put your stop here? That doesn't make sense. You could put your stop here and buy this and then get out here. That's all right. Now I want him to come back to where that trap trader was. The X. And then this one didn't defend either. So they probably won't get through that. And I want to see them hold it. And then preferably a triangle up. Right there. That, oops. That is your next long. Only problem, you have an aggressive trader. Do I have risk reward? Not really. So this one's risky because he may defend. This star may defend here. It just depends on how trapped you think they are. So probably works, might get stuck. Works. And now he did not defend, right? So now if they come back in here and bounce, that's good news for buyers. They don't. So he defends a little higher. And what we call, he freed him. So this guy was trapped here. He's now been released. That's bearish. So if they continue lower, which I think they're going to, I'm pretty much, oh, they don't. They didn't get a VPOC. This is purple. They didn't get a VPOC below it. We're not ready to go down. I would need the yellow line on a non-purple bar that's bearish. So these stone colored, to get underneath him, and it didn't. So he is still trapped. So triangle up, long. Right? No triangle up. Okay, nothing to do. Let's see if they release him now. Purple bar. This one. He got released right there. Now it's bearish. Sorry, I forgot this was purple, not it delays things usually. So now it's bearish. And how bearish? Well, until we get back to the next trap trader. But that's right here. So that's where we got. That's your target. It's basically done. The bear move was that because they were trapped down here. So now you could do triangle up. That's probably a long because this guy is still trapped on like a higher time frame. It might get choppy though because this guy was released. So once we get back to this zone, it's going to probably get choppy. See that? Not fun, right? But that's here. That's better. So this came all the way down to the bottom. So now I've got better risk reward. And I've got an aggressive trader getting beat right now. Oh, there's no triangle. Nothing to do. Darn. Because that looks like a pretty good trade. Probably just squeezes. Yep. So once you've done this for a while, you can kind of recognize what you want it to look like. But it's important if you're going to trade these tiny time frames, which you don't have to do, but I do. You don't need all of the algos. Like most people in the room are looking at this many. So they have the stars, the purple pink bars, the triangles, and dots. And more or less that's all you need. But like I said, I've identified that I can catch more trades. For instance, yellow, get white above yellow, get a blue dot, long. Like it works a lot. And then it works in reverse too. So blue dot, get bearish bar that's not purple underneath blue dot, get yellow dot, bearish. Now here we had that trap seller here. So, and here. So these guys, like I said, are going to act as support until they're freed. So I wouldn't personally take that trade because you don't have great risk reward. You'd get in here. Your target is here to basically exactly where you are, and you'd have to put your stop above the yellow dot. So not great risk reward, but technically valid. And then it does it again. So now look, this guy, we cleared him. Now blue dot, bar, it's got to get the VPOC, the dash below it on a bar that's not purple. And then you need a yellow dot. But then they get stuck in the same spot. They give you another yellow dot. And see, this one was defended. This is kind of in the weeds, but yellow dot, you can't get VPOC above it on a bull bar, and they give you another yellow dot. So they tried to take it, and they failed. Now, triangle down is a short. But it's only to wherever support is. And right now, we still haven't fully gotten him done, but that's support. Yeah. See that? It's like lines up almost perfectly. Right? So now, is that the low? No, there's no way to know is the truth. But there's more trap sellers down here. So that's going to probably react. Right there. Right? So if this is a triangle, that looks pretty good. But it's not. So I would have missed it on this time frame. But again, you've got other ways to see it. Because it's all the same information, just a different time frame. So here, I did get the triangle. So I could enter on the 24 tick, but my stop is bigger. So I need to have risk reward that's bigger, which is sometimes a challenge, but it works. Okay, so that's that. Let me show you today. And I want to demonstrate, I was showing this in the last one, but in addition to the double dash setup for absorption, yeah, that's the right word, there's two other trades that set up with those dashes. And then the little T is also new, as is, I've replaced the volume diamonds with a different diamond. So now they're green and orange. They're still based on volume, but they shouldn't show up as often because I was getting the pink and purple ones way too often. It was not useful. There were too many of them. It needs to weed out signals that aren't valid, and it just wasn't thoroughly doing that. So so here's the orange one here. That's bearish, and then the green is the bullish. It's still showing that there's a whole lot more volume in that bar than I would expect, but how I'm going to use it is if it's not at an apex. So these little sideways triangles, the little flags, those are the apexes. So you can see, you don't know that that's the only signal that doesn't print immediately. It'll print a few bars later. So once we're here, you'll see this show up, and it's telling me to look at that level in the future for liquidity sweeps. So as we're here, let me go back to when it was ranging better. Here. So this shows up 1, 2, 3. So as soon as that bar closes, this shows up, and it's telling me there's liquidity down here. And if they come down there and sweep it and lift, I can probably get long if it's bullish. And we just talked about some of the ways to see it's bullish, such as getting above yellow dots or returning to a level that had trapped an aggressive trader. If I already knew that existed, that environment existed, I just need to get behind that liquidity and then reverse. And then they do it here again. Take liquidity, triangle up. And that's called an apex trap. And it's like the first trade that we learn in Trade and Perform in the trading room, because it shows up so often. And it's super powerful. But there are ways to refine them. Like normally, you can just draw this, get long here, put your stop here, and get 10 to 20 points a lot. But there are ways to make that better. And one way that I found that makes it better is if you have a green diamond, especially if it's not at the apex, but after it, then that bar is going to be a lot harder to break and hold under. They can test under it like this, but it's going to be a whole lot harder to push under it without at least trying to return to it. So in this case, what that means is when they are at the apex, like this one, this diamond is associated with the swing low. The trap that shows up after sweeping these stops is going to be better than the one that didn't get it. That's the first thing. And then when they don't show up at the apex, but instead later on, and remember the diamonds print immediately. I don't have to wait for those. But by the time this bar is printing, I know at that point that the swing low is here, that will show up. This swing low apex will show up when this one closes. And then when I get the diamond and I know I'm above that, they're squeezing. So I can immediately buy this or any pullback into that area because this apex is now like buffered. The likelihood that we're going to come back in here anytime soon is very low. And so I can find one on the bear side, show you how that works. So here's the same thing, apex, right? 1, 2, 3. So by the time this closes, you know the swing low's there. and you got the diamond, I know I'm probably okay to go right in there, and I'll get 10 points more often than I'll lose 10 points. Now this one, you wouldn't know that there was an apex here because it's only one, right? 1, 2. You would need one more to see the apex. So this one is not a buy. It's got to be 1, 2, 3 or later. So for that move. So like this one too, not far enough away from the apex. This one's on the apex, so the sweep here is good. And oh, this one is far, 1, 2, 3 from the apex. Most of the time I'm going to get 10 points here. It doesn't mean it's going to high day or anything. It just means it's probably going to go higher. Here's one that fails. They don't all work. You probably wouldn't take this because you've got an aggressive trader and the resistance is right there. I expect them to defend that. So you have to use some, you don't have to. You can just take the stop and accept it. You will anyway take stops, but there are ways to avoid them if you can read the market and kind of where your support resistance is. You can miss a lot of the stops. So like, here's the bear one. So this one's at the apex, which means if we came back here, I'd want to sell if they turned it around. And then this one, we have 1, 2, 3. So by the time this one closes, the apex shows up and any orange dot can basically be sold. Oh, almost cascaded again. And it'll take you to support, not necessarily low a day, but probably support. So I would target, this one had a green and it was an apex. So I expect them to sweep liquidity here. And if they lift it, I don't want to be short, right? But look what they did. They put another orange one here, far from the apex. So that's saying it's going lower. So that's a short, targeting 10 points lower. And there's no resistance underneath it, really. And that's the last one there. Let me see if I can find another one. Okay, no apex here. No apex underneath it. Nothing really to do with that. Here's one. Apex, at least 1, 2, 3. That's when they show up, right? That's when the apex is confirmed. This says that that is probably going to hold. So you can either long it or buy a pullback. And you'll probably get 10 points more often than not. At least once. This one, yep, that's safe. Here's the apex. Apex, 1, 2, 3 bars later, it shows up. I know it's there. Now, any green diamond, 10 points. This one failed. It triggered and it just fell. Is it resistance? It's an aggressive trader. Ran right into the aggressive trader. The X's and the stars are 2 different ways to measure aggression. And it literally occurred right there. So, don't take it. And let's see if I can find one more. Here's one. This is good. Apex, 1, 2. It shows up here. Once this closes, we get the green diamond. Buy. Here's another one. Apex is probably there with the green diamond. 1, 2, 3. It's confirmed. And that's telling me that this is support. So as long as I can put my stop down there, I can get long. So this is pretty far away if you want to put your stop there. But this is good. So if you want to wait for the pullback, that might make more sense. Otherwise, buy this, stop here, take a stop, and then when you get a lift, you can re-enter with your stop where it belongs down here. Because sometimes they do just go. apex. So I would expect this liquidity grab to go down, and it doesn't, which means this guy's trapped. So now I want blue dot, triangle up, buy, and buy. No blue dot, but triangle up after the bounce is good enough for me. Yeah, no blue dot. It doesn't. That one might have failed. And see right here, they recovered him. It's actually here. VPOC needs to be under it. Now it's bearish. Anyway, you can kind of mix these ideas together, and as you go, kind of make a determination of whether or not you're bullish or bearish, and then just wait for the signal that you were looking for. Hold on. Actually, give me like 2 minutes. Let me just check in on someone here because I'm getting a couple texts. Make sure that this trader doesn't need to chat with me. But I'll be back in 2 minutes. I'll let you know. But give me just a minute. Okay, all good. All right. If you're gonna agree to be an accountability partner, you gotta be there when you say you're gonna be there. But he's all good. Just someone said he got a little bit chopped up today. It was, like I said, I thought the morning was hard. Okay, so I talked about the diamonds. Oh, the dashes. Okay. So another way you can use the diamonds, and you can also use the dashes this way, and this is primarily for me, unless someone in the room who already has the algo wants me to add these to their Sierra, because if you already have the algo, I can, if you're in the room, you can DM me in Slack and I can show you how to build the extra settings, the extra setups, but or studies, I mean. But if you don't have Simon's algo, then it won't work. So the double, like I said, the double dashes, when they're one right after the other, beating those is a sign of exhaustion. So if we put a line there, if we can get VPOC, the yellow line, above it on a bull bar, see it acted as resistance, and if we can get above it, I don't think they do right away. I actually don't know how long that stays that way, but typically if you can get above it, it's a sign they've exhausted. If you can't get above it, they probably haven't exhausted. But another way to use them that you can also do with the diamonds. The diamonds are relatively simple. It's basically just a lot of volume in the bar. So one thing you can do is if you have either a dash or the diamond outside of the bar, the green or the orange, if you get behind them, at least get VPOC behind them on any bar going in the opposite direction. So actually, I'm wrong. You only have to get the close above it. So close above the bar with the dash, and you need the VPOC, which is the dash. I've just got it highlighted yellow. It needs to be beat by the VPOC of the same bar. So if I draw a line on the VPOC, the point in the bar with most of the volume, that's where the red line is. I need to get a bullish bar with a VPOC above it, and then I need to get a bullish close above the high. Now, that's not bullish yet. It's just the first step and kind of a complicated setup, but the setup is cool because the way it works is once you've gotten that, what I call a signal bar, which is here, because we close behind a dash, and we got the VPOC, the green line here, the yellow line, I mean, to lift above this one. So it's not bullish or bearish yet, but if we can now get a triangle down underneath this bar, the signal bar, then the signal bar becomes resistance. And this is resistance. So here, where the arrow is, can be short or wait for the pullback and then short that. And you get a drop. It needs all those components. You need a dash, a bar with a dash, or a bar with a volume diamond. You need to get behind it and close a bar in the other direction behind it. And then you need to get VPOC shifted behind the VPOC, of the dash bar or the diamond bar. So let me find another one just to demonstrate that I'm not making this up as we go. See, this one did not get beat, and that's in and of itself bearish. It got tested and rejected. So these, just to kind of explain a little bit, I'm not going to go, I went into more detail in the previous stream, but what this is looking for, it's looking at volume, and then it's also looking at volume delta, the dashes, and it's basically saying we would expect that if this was bearish, for this example, they're all white, but the dashes are all white because they're interpreted the same. But if it's on a bearish bar, then since there's lots of volume, and more than we'd expect, and yet there's not more delta, like more negative in this case because it's bearish, it's vulnerable. Basically, it means price is moving because it's a bearish bar and it's Renko. Volume is increasing, but the amount of that volume that was done on the ask or on the uptick, really, versus the downtick is not as different as I would expect given the range in the volume. I'm not going to give any specifics of what the levels are and the ratios and stuff, but that's what it's doing. And I can share that because it's my own signal. I don't know all that about all the trade and perform signals. But what I'm finding, I kind of think of it as like, it's how can I explain this? It is a area that is contested, right? So if there's a dash, this one, and they show up on bullish bars, that's another bearish one. If there's a white dash, that range was contested. There was a lot of volume put in, and not all of it was done on the up or the down tick. In fact, it was less different than I would expect. So it's not just because it's on a bearish bar does not mean you should just sell. It's not an entry, like, as far as I can tell, ever. In fact, there's a lot of times where if they show up on an entry bar, it tends to mean that the price isn't ready to like leave the area quite yet. But because it's contested, if it acts as resistance or it breaks over it and acts as support on the other side, it really doesn't matter if it's a bullish or bearish bar. It just needs to be defended or show interest in the area where there's people lining up to sell or sell below it or buy above it. It's a pretty good indication that that level should now hold for at least one rotation, because it was well contested before. We've returned to the level and it's no longer contested. So by themselves, when they're not duplicates like this, like one right after the other, you can just consider it a level to watch for. And if they defend it and you get continuation and especially aggression, like increase in speed, increase in volume, not always increase in volume, but let's say, what's the way to say it? Like if the volume that's in the bar that, oh, did I not? Okay, sorry. I think I flipped back to that or I picked the wrong one. Okay, so we're talking about these dashes. Let me show this one more time because I don't know if I had my screen showing. So, okay, so the dash is here, right? This one has 2 in a row. Okay, the easy setup. Find the dash, draw a line at the wick, and if it acts as support or resistance, just get under it if it's resistance and print a triangle, and you'll probably get 2 more bars in that direction. Plus, if you wait for the retrace and they reject there, it helped that there was another one here also acting as, see this one below the high also acted as resistance. So that makes it bearish immediately. Once it's rejected and it closes, it's entry technically if I get a triangle after that, because that way I know not only are they rejecting it, but like the triangle kind of says like they're ready to go. It's not always perfect, but it's usually you're not going to get a lift or a rejection that continues without seeing a triangle. That's not always true either, but that's usually the case. So the triangle is the easiest way to get in, but a star also works pretty well. So here, this rejection of the dash that's followed by a star in that direction, usually good. But the triangle, the red triangles for the bears, are good. So this one, draw a line. Are they rejecting it? So you can see here, they reject it, right? So normally this is a short. The problem is support is literally right here. So all that setup usually does, it doesn't just go 2 bars. It usually goes 2 bars or to support. Well, support is like 3 ticks away. So I personally wouldn't take this. Plus you're at yesterday's point of control, volume point of control, and that's what this blue is. And that's just not a great place to trade in general. So this probably is not a great place to demonstrate because it chops a lot around yesterday's point of control. It's where most people did business. So it's not contested on a bigger time frame. But yeah, if it wasn't for that and wasn't for this support, that would be an entry right here, short, because of this dash. And then let me just find one that's somewhere else. Here we go. So here's a bullish one. Okay, it did not act as support, right? So they did not defend it. Still contested. So we would have to wait if this was the only setup we could use. We'd have to wait until that level or another dash shows up and that level is defended. Now here we really didn't get a clear defense. I don't know how long these go, but usually I'm just watching it until they leave the area. Here's one. That one gets defended at the high. Did this one do that? Not really. It's pink, which is kind of weird. Okay, here's a double. So the doubles, like I mentioned before, when they're two immediately in a row, basically it's a chance that it's exhausting. But what you need to see is if you're going up, that second one needs to hold. And it didn't. So here, if it was exhausted, which the location makes sense. It's the top of the market profile point of control. And so they tried to defend it, and the buyers just kept buying. So once we've left this behind, triangles up are going to start to work because we know now that they're not exhausting. If they were exhausting, what we would get here is that level here would act as resistance. It's also overnight low. So here's one. Like I said, this is the easiest way to use it, but there's other ways. So here, this one, oh, and then there was another. So was this area rejected or defended? Oh yeah, right there. Defended. See that? Now, the triangle that follows is awfully close to support. So am I personally taking this? No. There's some other ones I missed. Hold on. So there's this. This one doesn't have a wick. I doubt it'll work, but it's there. Yeah, that kind of same level. And then this one works nicely. So this was defended, right? We left the area, came back, they defended it, suggesting that these triangles will probably get us to resistance. Now in this case, it doesn't really do much because we ran into the other ones. And when you have this telling you to short and this telling you to long, what you're going to get is chop, chop, chop. And then in a higher time frame, it's probably more clear. In the higher time frame, let's check. Okay, there's one. Not defended. Not bullish. Here's one. Not defended. In fact, they got under it and then triangle down. Hard to see because there's a T in front of it, but that would be bearish because we had a bull. They tried, they lost it, and now it's resistance. So on the higher time frame, it's clearly bearish here, but over here, it wasn't so clear. But you can see that level is here. So if you tried to trade this tiny little time frame, you could totally get chopped up with this setup if you try to trade it in environments like this. Where it works better is when range expands. Whoops. So once range expands, so this is not where you want to use them. You can use them for exhaustion though, like here, getting above this, because they're double and we're dropping. We are exhausted. The sellers are exhausted. We've gotten above it. Now we can start buying. That's how they're useful when it's choppy. Now that we've got range, now we can start seeing if they defend this. They can be the VPOC too. So this one, defended, bullish. Defended, bullish. Does this defend? Let's put it on the low. Yep. So see that purple underneath, but no VPOCs underneath that aren't purple, and then they bounce. So that's a long. Doesn't get much. Oh, it ran into this guy, I guess. I'm kind of surprised that didn't work. This one's got one too. None of them are defended. So now it's bearish. If it was bullish, it's not anymore. Okay, so that's another way to use it. And then the way I was showing before I fixed the screen is if you get one and then you get behind it. So back up here a bit. I don't know if it works here, but we'll try. So you get one. You need to get VPOC. If it's a bullish dash, bullish bar with a dash, you need to get VPOC to drop below VPOC. So this one went up, so that doesn't count, but this one did. And the close needs to be lower than the low. So it officially beat it, that triangle down with the plus sign. Now that is our trigger to recover this bar if we can get a triangle up bar above it. So this bar is the one that beats it, but it's not a triangle, so there's nothing to do. And we lose it again. It's possible that triangle down that recovers is good too. I've noticed that as well. This triangle's early, and I doubt it works any longer because there's another one. So let's find another one. That one just didn't trigger. It's not a stop. It's just didn't trigger the way I'm used to. Okay, so here's two of them. This should work. So the bull, we got to close below the wick, but we did not get VPOC to drop. So there's really no bullish option because we would have needed a bear bar down here with a drop VPOC and then get over it with a triangle. The bearish one would be a VPOC above this, so the pink, and a close above it, so the pink. So get under the pink with a triangle down, and it's bearish. Note we can't get under the pink at all. That's bullish. Because, again, this area was contested. If you think about what this is really saying, this area was contested. We left the area, and the idea with this setup, the complicated one, is that if you leave the area and then recover that, because this guy got beat. If we then recover him, it's probably bearish. Well, if we can't recover him, he's trapped. So now it's probably bullish. So here's this one. Get above it with price. Get above it with, get above VPOC with VPOC. So this guy with the green diamond is our signal bar. Get a triangle to close below him like that, and we drop. Now, like I said, what I don't know is if like this was a triangle above it and we recover him, can you take it that way? I actually don't know. Interestingly, this can also work with the diamonds, the big volume diamonds. It might not work quite as well, but the idea is the same. So diamond, we need VPOC to drop below this, and the low, the close, sorry, it needs to be below the low. So it's this one. So the idea is get a triangle above that, which we don't get, and that'd be bullish. Let's see if this one works. We need a close below and a VPOC below, right there. Get a triangle above this bar, which happens here, and you can buy. So you lost, in essence, we have big volume, which obviously means they're interested in that area. They're usually gonna have a reason for that. They take them out, close below it, drop VPOC, so they put more volume in this bar below where they had all the high volume in this bar, and then they recover this bar. So just after beating it, or where sellers try to push underneath it, buyers show up and defend late, and that can squeeze. It's a little complicated, but it really does work. So here's another one, diamond. This one is the one that gets under the diamond, the purple. Close is under the low. VPOC is under the VPOC. We need a triangle up above this. This is the trigger. So that would be a long. That one appears to fail. Not all of them will work. This one, it's the purple bar that gets below VPOC with the VPOC line and close below low. So now we need a triangle up above that. See, that's not a triangle, so that doesn't count. I'm curious if the triangle down below it is continuation. It might be. Seems to work. That's kind of cool. So basically it's just a triangle that shows up on either side of that line. Neat. So a lot of dashes in here. It's pretty choppy, but this one would be the purple. So that's this triangle. You'd have to put your stop down here, and you'd try to push through, and that one stops. The bear, well, you can see that this dash, which also had the diamond, is immediately defended. So already we should be bearish. But then, if I remember correctly, there's another one that triggers bullish right here. This purple one got price below the low, VPOC below the previous VPOC. Triangle up above that. That's bullish. So it's funny because that was the trigger bar to get short, but then that one got trapped. So it's long. And then the stop has to go down here, and that's tricky. Now remember, this is VPOC from the previous day, the previous regular trading hour day. It's going to be choppy there. You're probably better off just not trading at all. But if you're going to, this is where you'd get long. Here or here. There we go. So that's kind of neat. Like I said, is it 100%? No. And the choppier it gets, the worse the win rate. Win rate. Wow, I can't talk. Let's see. Some other ways to use these dashes. If you have a big range rotation, so this, like a big squeeze or a big drop, if they put a dash at the very end of the rotation, which you don't know where it is at the time, but if they do, and then you get the apex to show up, the little flag, and get under the dash. There's no dash there. Let me find one. It's got to be here we go. This. If you like bury him, especially when he's got the diamond too, because that means, remember, diamond says way more volume than like I would expect here. But the dash says big volume, yet weak delta. Like, price is dropping, volume's increasing, but the majority of this bar was not just aggressive sellers hitting the bid. Like, a good part of the order flow during this bar was actually buyers defending the level. We don't need to know why. In this case, it was opening range low, but it doesn't matter. It doesn't really matter. All we need to know, it's not time to buy just because you see the signal, right? But if you can bury him, if you can trap him, you're going to get a squeeze. So it doesn't have to be the low, but you can put your stop right there and enter maybe here or here or here, wherever you want. And the important thing is that this guy needs to stay trapped. So if we get under here with the yellow line, the VPOC of the bar, it's bearish again. And don't mess with it. But if he remains trapped, anytime they pull back, they're just going to buy it again. Yeah. Hold on. So let me just see if that rings true. This is perfect because it's even blue. It's just a great trap. Let me just double check and see. Does it hold? I wouldn't be surprised if they get below this and then rip it up. Let's see. I don't remember. Then they went right to it. And tried to lift. Got under it. But see, VPOC's not under it yet. Yeah, they get VPOC under it. Big bull. right? It's bullish. Yeah. So you get 2 trades for that. You get this one. Just, we trapped the, like, important level. Again, it doesn't matter why it's important, but for some reason everyone was fighting over that level. It was a bear bar with a lot of volume, but low delta, and we got behind it. It's probably bullish for now. When they come back into it and they can't get volume below it, they actually decrease volume into it. And delta goes up. That's funny. That's going to squeeze. And then you've got the diamond that's not here, which is at the apex, which is usually bullish. Now, third trade is here because we can't get the VPOC below the low. It's at the low, but not below it. So they can't develop any volume down here on a bear bar. And then they do, and it gets another dash, meaning lots of volume, but contested, not clearly bullish. Well, it closes bullish, which is a good sign. But when we get triangle up, we've now retrapped this guy. See how the close is above this? So we might get a pullback, but I'd probably buy it. Otherwise, you'd just buy this. No pullback. Just maybe a late one. They need a triangle up to save it. Still have not gotten VPOC below. Now they did. Now it's done. Oh, wait, but there was another one. But it's on a bull bar. So the only way to get along now is to get the VPOC under this, which they didn't do, and a close below it, and then beat that right there. So we need to beat the purple bar with a triangle specifically. Right there. So this is technically an entry, and your stop goes under this. Oh, that one stops. Does this one work? Because this one also triggered. No. Interesting. So why do these stop? That would be a good thing to know. Let's see what happened here. Ring triangle up at that location. That was important before. Remains important. Couldn't get VPOC below it. Rotates up. Who defends here? This guy. Are we below blue dots? We are. So this blue dot dash diamond bar, we got him beat. And they could not get a triangle up. Instead, they get triangle down, which appears to be a pretty good short. That's like the 4th time I've seen that in a row. So, short, when that gets lost, I guess. When this can't get defended and the line gets lost, you can probably short this. That beats this, and what I would expect is that is our signal bar. We have 2 stars to the left. Could it be that because this VPOC did not get taken, that it might not work then? Hold on. Did they probably did beat this. Oh, definitely. It's the other trade. It's get underneath it and recover it. Could it be that you need to you shouldn't have to. Maybe it's because it's bearish enough. We got underneath blue, we rejected, triangle down, bearish. Bearish here. This got beat, and then that gets trapped. It might just be this old resistance just continues, or old support continues to act as resistance. It might be that simple. I mean, stops happen, but I'm just kind of curious why there's 2 in a row there. I guess maybe the easy way to deal with that is not to take that trap trade when you're counter trend. So let's see. I wonder if Oh, could it be because they had because look, this dash was at the top. We know beating that with triangle down is like bearish, very bearish. And then this one, we got under it, couldn't beat it, triangle down, bearish. So we already knew it was bearish, and then this one, get under it here, because VPOC has to drop. So get over this with a triangle. Oh, this one? They can't. They can't. So that might just tilt you bearish. And I bet this is resistance. Yeah. So does that mean that I'm right, that these are resistance and this is resistance? Sure. So counter trend, that's not going to work unless you get over it, which means you'd have to get the VPOC high in the bar. So, oh, and the bar needs to be above this. Interesting. We finally do lift when we exhaust. I know that is already a good signal. So they eventually exhausted. They beat this. They all get squeezed out. Now bulls should start to work. So this should work because we have dash. VPOC dropped. Close below the low. So get above this with a triangle. Ah, and this triangle has a VPOC above this dash. This will work. Ah, okay. So it's not going to work counter trend unless you beat that VPOC. Okay, well, that's something I didn't know. Because it's a new signal and I just haven't tested it in a trend day, but I bet anything that is consistent. Let's see if that's the case for the higher time frame or if that's just something specific to the smaller. Let's check. So I got to get behind it. Where's this down start? Okay, so we get one here. Can't get behind it. We get one here. Can we get behind that? Right there. This VPOC didn't... Oh, wait, yeah, it did. VPOC got below. Close is below the low. That is your signal. You need to get triangle up above that. And you need to get the VPOC above that, which we do. And it tries to lift, but it runs into trouble because it's bearish. And it's probably not smart to take counter trend. Then this one turns out to be the high of the rotation. So triangle down underneath that when it's bearish is going to be bad for bulls. Good time to short. Ring triangle down is also good. But this one, getting beat by a triangle, if you get VPOC above this, would probably be bullish. And we don't. And this one, you don't get... Do you get VPOC below? No, it's like even. Yeah, so I don't think this one counts because it's not a VPOC below. It's a VPOC even with the dash. So once they did get VPOC below, I guess that makes it bullish though, because they defended it. So that would make me want to take this triangle. And that comes to resistance. The only reason not to is because this is so tight and consolidating. Then we have this one. So get a triangle above that. And we don't. Can't do it. This one back here, we said if it didn't trigger there, it triggered here. Triangle up above that. Can't do it. Still bearish. There's the triangle. Not where I want it. Oh, it just turns. Without signaling with this. They got up above this yellow dot and then printed a blue dot. And it was over. Dash. This one doesn't get it doesn't get behind it. This one doesn't get behind it. See how the VPOC acts as support? Super bullish. Yeah. That looks too easy now. Let me back up to the beginning of the day on the 24 tick. Okay, so here's the open. VPOC at the top. See this one, pre-market, defended, bearish. This one, the VPOC needs to be above that. So it's this. That's your signal bar. Get triangle below. And VPOC below this. So this one didn't quite reach it. But this one did. I don't know if that's too late or not, but appears to work. This one, need to get behind that. So above, doesn't. This one gets defended. Bearish. Triangle down. It's here. Covered up by a T. Goes right to support. Okay, this one gets beat here. That's your signal bar. Triangle down. So same thing. Bearish, but into support. Dash is beat. Signal bar gets beat by triangle. Does the VPOC beat this VPOC? No. Does this fail? Yep. Cool. That does work. That's neat. Okay. Does this one get beat? Nope. Acts as resistance. Right into support though. Does this one get beat? Right. I gotta get. Yep, this one. So get under that with the triangle. Doesn't. Bullish. This one's at the end. Triangle down. Boom. Oh, but it's only gonna go to here. Why? He gets stuck. Oh, because this is our signal bar. Now this one, triangle up, VPOC is nowhere near the dash. But we might have risk reward to attack the high. Yeah, see, it's not going to necessarily lift any higher than where liquidity is. But we're far enough down that it might be worth taking, I guess. The diamonds should work similarly, but this one just got defended, so that's a reason to stay long. This one beat by this bar. Get above that with a triangle. Does not reach it. Bearish. Defended. Bearish. This one. Oh, we just did that. Right? No. Because this one gets beat here. Ah, so this triangle up did not get VPOC above this VPOC. So you don't buy it. That really does seem consistent. Okay. All right. I'll adjust that and probably skip at least 30% of the stops. So that's great. Okay. So the only other thing I want to cover today, because I've already covered a lot, is I adjusted the T indicator, the green and the orange T's. They don't show up as often. They were showing up too often for me to process, and I just couldn't handle it. So I'm going to miss some trades, but it should work better. So I explained this in a previous stream. The way this works, you want them to show up late in the rotation, like that. Then you need to get above them with a triangle, and you can be long. Your target is the next T or a high volume point like this. That's your target. It's just a scalp. It does not mean you're going to break the high day. But you can see when the T is not at the end of the rotation, the triangle down or whatever won't beat it. And there's a chance that this can then act as support leading to continuation. So you don't want to short when you've got a T right in front of you on the rotation to the other side. I realize that this one worked, but I am not going to short this. But when it does work, and then that T acts as resistance, that can be short, which I explained in the from last week. A stream last week. I think I call it the tripwire, and that's why it's a T. So like here, this T defended, bullish for the moment. We get to the end of the rotation, we get a dash. That's usually bearish. We get triangle down. It gets underneath the dash, but not the T. So you have to be careful because this might be support. It might bounce. It doesn't, but no. Oh, this got taken out already. I forgot. Once you get behind it, it's no longer valid. So this T is no longer useful except for being support or resistance. After it happens, you can identify that the reason why it's support or resistance is probably because it's a old T that got stuck, like this. See how this T, your long is here when you beat it, but when they come back in and you can't get under it, it's bullish for the time being. Now, this only came to here because there was a T right here. So even though it was bullish on this triangle right here, that triangle did not clear the T's. It cleared this one, but it ran right into another one, making this long less good because your target is the VPOC of that T. And that's only like 4 points away. So it's a relatively easy way as long as there's not too many T's. And if there's way too many, it's too choppy and you shouldn't be scalping anyway. You should just be waiting for the level to get lost. But like, see this? Acts as resistance. And then this one would need to get beat by this triangle. Otherwise, it could act as resistance. And that's why you don't buy this, because it acts as resistance. Once it does act as resistance, and it's bearish, like that and that, you can short it. So if it beats it, and you've got clear skies ahead with no more T's and no more big volume to target anywhere nearby, it's just an immediate entry. If there are T's on the opposite rotation in the way, you don't take the trade. You wait for the T to get tested and see if they act as resistance or support. When they do, now you can short. And again, it's one of the more complex setups, but once you get used to it, it gives you trades like constantly, which is kind of cool. So like I showed this last week, but I'll use this new data with it. I haven't changed how to use it. I just changed, I'm making it so they don't show up as often because they were way too many. So I had to filter some out. So let's just start at like pre-market and we'll just take them as they go. So no T's up here, then you have a T. You need a triangle above this to trigger long. You don't get it, but we clear out the range of that T. So this T is no longer going to be expected to act as resistance. But if it is, it's bearish. But we're not going to worry about it being resistance until it actually does act as resistance. So in other words, if you had a reason to buy this, like the star, you wouldn't worry about the T being resistance because it's already been cleared. The orders, see, the reason this works is once we see the T, they're likely to defend it. And they do. But once they do, now they're done most of the time. And if they're not, it's definitely bearish. So here's another one. All right, so we'll leave this one behind because it's been cleared. Oh boy, how do I see. Oh, I thought I could do it that way. Okay, never mind. So this one here If we can get a triangle above it, there's no T's up here, so we target this big volume, the dash. No, doesn't get beat. In fact, we get a dash. So T followed by dash is usually going, it's usually going that direction. You need a, I'm not going to enter there, but that's a pretty clear indication that we need to beat both of these. And that's big volume, and this is big delta. So, like, good luck, you know? Usually that's going to hold. Okay, so that could continue to be resistance in the future. So we'll leave it. There's another T. Beat it with a triangle right there. That's a long. Where are we targeting? The next volume, which is this, or resistance, which is this. Not much meat on the bone, and it's counter trend. Probably not worth taking, but technically triggered. If we're going to take every single one, that would count, and it would be a loss. Okay, this T. Does this act? But see how we did clear it out? So it's like no longer useful. We get another one there. Okay, this triangle did not close above the T, so I'm not taking that long. And it rolls over, which is kind of what we expect. Now, if they come back up, bang on this T and reject, I can look for a short. Like right here. Like that. See how they came back into it and rejected? That's the kind of spot you can get a pullback entry. Okay, this is a T. Bullish if we get a triangle above that white triangle. And again, T followed by dash, probably going lower. Okay, so this triangle is way too low. So the only way I could get in here is if I want to target this, which risk reward's kind of shitty. So not surprisingly, they act as resistance. The better trade is to short this, but support's right here, so I don't want to do it. But it's probably going to support. And they do go to support. Now we have to see if this continues to act as resistance, but we don't have a new T to trade out. Oh yeah, we do right here. I missed this one. So T got beat by a triangle. So this is likely to go to support. Well, support's not very far away. Risk reward's not good enough to try that. I'm not getting short 2 ticks from the low. And that would be pretty rough. Okay, so we come back through. Not surprisingly, we trapped some sellers. This T does not act as resistance. So now we can leave it there because it may act as support now. And then they came back into this one. They try to defend it, and it acts as support. It's probably bullish. T. So to get bearish, let me just delete these. We'd have to get a triangle underneath this. If we don't, we'd keep looking for buy entries. See how they like tap it and lift? Usually pretty bullish. Okay, but here's a T at the top. And no triangle down. They just keep defending it. It's not, there's no reason to short. You can just keep buying the dots, more or less. Or the triangle up. So this one already got cleared. This one got like partially cleared. So I'll move it down to there. In case it acts as support later. No T's here. So if we do roll over, it's got a long way to go. There's our T. If we can trap him and lift with a triangle up, it can go higher. There it is. So that's an entry. But your target is basically this. So again, this rotation, it's just not that big. So I'm probably not going to take it. But with the trend, I might be more willing to, since it is bullish. If I was looking for bullish entries, that's it. If I look at this on a bigger time frame and my target was 215 or something, yeah, I'm just going to skip it. Because they'll get there and then they'll roll. Okay, T at the top. Get a triangle down. Yes. So that's a short. But no, we have another T here. So if they bounce here, I want to immediately get out and probably buy it. So like this is not what I want to see. But we did get another T. So if I get triangle up, I can buy it. I'm probably covering my short. There's no reason to fight these aggressively. But it did technically trigger. Okay, no long. And then the short continues, actually. So it might have stopped me out if I probably would have trailed out that. I might have gotten 10 points and then just dropped the runner because it's like, nah, I'm not going to fight this. But now if we can get above this with a triangle, we can long. Ooh, 2 T's in a row. Those are hard to beat. Probably bearish. That's what I'm thinking. We come back to this undefended T here. They give us a green bar. Triangle up beats both of these T's. See how? Oh, maybe not. It's close. Not quite. So I'd probably skip it. It probably works, but it technically shouldn't be taking it because I'm basing my back test off a close that closes above the high. And here it's like 1 tick away, so skip it. Oh, it doesn't work. Beautiful. That's good. Oh, and since they act as resistance, that's a short. So if I got out of my short on this bar, which makes sense, I'd be back in the short. And then it gets to support, tries to bounce, no T. There's the T. So we'd have to get under this. So once you see the T, well, now I know it's not bearish unless you beat it. So if I was still bearish, I'd want to be out of it. Then I could re-enter if this gets taken out. They rip through this. Note, these already got cleared out on this wick, so we don't have to worry about them being in the way. So you had another way to get long. Sorry about the fighter jet. Remember, these diamonds getting trapped is a sign that sellers are trapped, and the stars getting trapped as well. So blue dots above that, and it's bullish. T's. Okay, don't beat that. Yeah, and then T followed by dot when you've got trap sellers under you. That's pretty good. Dash followed by dot. No T's. Okay, so we got to beat that with a triangle down, and see, we're not doing it. Because look, most likely that didn't reach. So I'm skipping that. I'm not shorting. I might miss it. Looks like I miss it. Okay, that's a T. So to be bullish, I've got to be up here with a triangle up. So if I'm still bearish, a retrace that like rejects here would be perfect. And then we just don't get it. And that's usually how the short side works. It like, you either catch it or you don't. On a smaller time frame, it probably triggered, by the way. No triangle up. No triangle down. Right there. This one. Triangle down underneath the T. So you're selling at 17. Stop up here at 30. It's not pretty, but it works. Okay, T. Whoops, I went too far. T beat by a triangle. My target is back up here at that T. So I'm buying that. T can't get beat by a triangle. You could buy that too. It gets to my target, right? It doesn't have to be the exact high. It's this wick, the T, that's not cleared yet. So if this acts as resistance, it's bearish. And it does. So you can just sell it, the triangle down. That has to get beat now to be bullish. Another T. That could get beat. But I wouldn't buy it because the resistance is right here. That full pullback could get shorted. Ooh, you'd be crushed. There's no aggression here. Oh, wait. Your target is too close. I'm wrong. I wasn't paying attention. Okay, so this triggered you long, but your target is very close. Big picture is long. It probably works, but I might not hold runners. I might try to get 10 and then be done. It might be smart just to skip it. Yeah, see? The resistance is this T. Here, I'll do it with this tool. This is resistance. So why even take it? I think. I got to do better at that. Okay, this T needs to get beat, otherwise it's bearish. So wait. Even though that's an apex trap, I need to wait. Because that's resistance. Triangle does not beat it. It's probably not bullish. Wait for the rejection and maybe short it. Oh, they clear it out. Ah, there we go. That's probably a short. T down, that's good. Don't beat that. You can hold runners. There we go. Nice. Okay, no T's? Interesting. They beat the dot, is what I noticed. So a blue dot technically gets me long. They come all the way back up to the bullish target without setting up. There's the blue dot, which showed up awfully late. I'm not going to mess with that. But they do squeeze. Okay, T. Triangle. Nope, no triangle down. Probably bullish. You could buy the triangle if you want. T. Triangle down. That's bearish. This T. Did it get cleared? Technically, no. Let's see. Yeah, and it doesn't work. Look at that. So the problem here, if you look close, this bar did not get under the bar with the T. So that means that this guy, the T, is going to still act as support. So for the same reason that I wouldn't buy this because of this T, I shouldn't be selling that because of this T acting as support. And instead, you just stay bullish because the trend is bullish and the sellers are trapped. Oh, did I miss one? T, did I beat it? Let me see. It's close. I think it's parallel. So probably not good enough. And it goes. Again, on the smaller time frame, that might have triggered, which is one of the reasons I like the smaller time frame. T, beat by triangle up. No T up here. See that? No resistance. Boom. So on the 15 tick, it triggered. On the 24 tick, it just didn't reach it. This T did not reach it. Don't short. It does go. See, so to get bullish, I got to get above that with a triangle. Right there. Buy. There's no T's up here, right? No. Stop goes down here. Oh, and that's live. Cool. And they're going to open in 3 minutes. So if I wanted to trade Globex, I'd be bullish. And I'd want to get long in that area. Like basically the open. And then the stop needs to go underneath the apex or underneath a blue dot in this case. And that's that. Now this one's got a dash, so it's got lots of volume, but they weren't very decisive about direction. So it's very common to get a pullback, and I may want to wait for that. If they do the pullback and they defend it, and we've beaten the T, super bullish. In addition, if they don't pull back and just go, also bullish, because that probably means someone's trapped down here, which again, I could look and see. See, this guy defended. He wasn't necessarily trapped. What about in the smaller time frame? X down, defended, right? Yep, defended. So the trap traders are lower than this. On this time frame, T got beat by triangle up. That's bullish. That can act as support, and it does. Still bullish. Oh, this T got beat by triangle down. Interesting. So, oh, I forgot to mention something. I might have mentioned it, but I didn't explain it. The dashes, as well as the diamonds with the volume, the green and orange ones, those can also act as support and resistance if you leave the area first like this. So if you get a T and behind you there's a dash, and like by definition, since it's behind you, you've already left that area, this is probably your target. So the target's already been met on that trade. It's just a scalp. It's 10 points. Let me see if I can find another one like that, and I can demonstrate how that works with the dash. See, dash, T. Even if I beat this, I really need to get under this T. I mean, this dash. Otherwise, that could also act as support. T. Let me see if I can find another one. So there'd be diamonds outside of the bar like this. So here, this is a good example. This one's got a lot of volume, diamond. This one's got a T. This one's got a T. All three of these can act as support. If you extend that, you can see that waiting for the first T to get beat by a triangle is a horrible idea. If you wait for both of them to get beat, that's okay. But that's your target. So if they all line up like that, the way to interpret it is it doesn't happen unless it's bullish. So instead, rather than fighting this when it's like diamond, T, T, and then triangle down, just look for a pullback buy and get a triangle up. It's probably bullish is what that means. Because if you're getting volume and then you're putting delta in with no volume and they keep going up, it's like this, dash, T. If they attacked this, I'd expect this to hold. So you don't short it. Find another one. And then I'll close it out because it's getting late. Oh, that's right, diamonds too. Diamond, T, beat this T, and I would expect the diamond to hold. Now that one didn't trigger long, but sometimes they do. Now this, diamond, T, when we beat the T here with the triangle down, we'd already gotten underneath the VPOC of all the diamond, of all the volume with the diamond. So it's already taken out most of them. And it's close to this one too. But see how this acted as support? And like this, oh, but there's no T there. So you wouldn't have a reason to buy at that triangle, really. This one acts as resistance. This one acts as resistance. Here's one. This is good. Diamond, T, T, right? I don't want to be a buyer into that. That's just bearish. So triangle down or star down, when you get, especially 3 T's in a row and like diamond TT or dash TT, it's, if you keep going, it's, yeah, like you're not going to be able to cut through that in one shot. Here, dash, and then nothing, and then T, most likely they defend this, if I had to guess. This one also has a diamond. Oh, they don't. Interesting. Maybe if it gets far enough away, it might stop working that way. And if it's this choppy, you just don't even pay attention, because like if you try to buy this when it gets over the T, you'll get beat. But that's because of this. See how you can't even get above the VPOC of the big volume bar? And then same with this and this. So that's just heavy resistance. So you're going to need to trap someone at the low, this swing low, which means put in a low, sweep that low, and then it can go. Basically, you need to stop out a buyer if you want to break through resistance like that. When it's otherwise, you're going to get this, right? It's going to bump its head and reject. The only other thing it can do is stop this guy out and rip. It's not going to do that. If once there's resistance here, like it could have there, but if you have that heavy resistance, this one's way up here. Kind of surprised that didn't work. I guess the purple bars got in the way. Like here, T dash T, you would expect that they defend this. So even though this triangle up did beat this T, it's not going to be smooth sailing most of the time. Usually, you're going to lift to here. They're going to try to defend it. And then they make a decision of whether or not they want to put a triangle down and make a new low, which is shortable. Or if this is defended, get a blue dot, and then you can long it. So, in other words, while the entry here looks better because the price is lower and your stop goes down here, when it comes to win rate, this long with your stop here is better because we've already cleared this and they're still bullish. I hope that makes sense. Now, like I said, even without the algo, you can see these things on the footprint and the profile and stuff, watching the dump, but it's harder to see and it's going to be harder to be like confirm that you actually are seeing what you think you're seeing. So either find a way to add some studies to indicate these things, or join us in the Trade and Perform room, or find some other way to objectively like systematize when you know what to do. That's what I would suggest. You can contact Simon, my coach, and ask him for a 5-day pass to the room and see what we do. His email's trade, the letter N, wordperform@gmail.com. Otherwise, you can find me on Twitter at RedBenTrader. I've got a free Discord if you want to see what I'm doing. I don't spend a whole lot of time in there, but you can hopefully learn something. So thanks for watching.